Hello there. This is James, and you're watching OneRoyal Live, but not just OneRoyal Live. You're watching OneRoyal Live WatchAlong of the non-farm payroll. But today is actually a special program. It's not just because we're watching an NFP, which is obviously a big event, and we'll go into that. But today, I'm incredibly lucky, amazingly lucky to be joined by a very good friend of mine, a very good colleague, a founder of OneRoyal and a director of OneRoyal, and someone with years experience, and that is Jerry. Please welcome Jerry. How you doing, buddy? How's things?
James, how are you, sir? Very good to see you live and in action.
Definitely.
Good morning. Good morning from sunny Florida.
Yeah, it's really early for you, isn't it? What time is it?
Yes.
8:15?
It's 8:15 on the dot, 15 minutes to the event.
Wow,
exactly. Excited.
15 minutes. I'm very excited. I'm more pleased that you're actually watching this event with me. Jerry, because obviously you have years and years of experience, can you share with the good people a little bit about your background? You know, what experience you have in the industry? Because I met you for the first time in Dubai. I was so impressed with your knowledge and your experience. Share it with the good people so they know.
Well, I started very humbly in the futures exchange, working for an FCM. That's where I really learned everything about trading, how it works, the history, the hundreds of years of action, how it works, price discovery. It was very good. And then in 2001, we became privy to doing Forex, CFDs, taking risk. So I moved over from operationally doing commodities right into this great world of Forex, which I have not left since. So my experience comes from the very early days. As you might remember, you and I might be close to the same age.
Okay, so, don't tell everybody, Jerry. Keep that quiet.
So yes, that experience from the beginning days there in the States, where everyone got excited for the retail business of Forex. So since then, I've done every job in this business. I like to say I was the janitor and the president at once. So I've been able to, clean things up as well as make it messy.
Yeah.
So, and the experience from there is with the people that's involved in the industry, as well as everything revolving around how prices work. And that's, I think, where my experience lies. How does pricing work? Where does it come from? What is price discovery? And how do we use that for our benefit and for the benefit of our clients? So there you are, sir.
Excellent. Well, I'm absolute pleasure to have you on.
Pleasure's all mine, sir. All mine.
It's each other. We're too nice to each other. Anyway, today, of course, we've got the US non-farm payroll, which is obviously May's payroll. For those who are new to trading, they might be asking, why are we getting all excited? What's all the fuss about? What is the NFP? So let's give them just a very brief description of what the non-farm payroll is. Now, why it is important, especially in particular to Forex traders in particular. Now, the NFP, or non-farm payroll, is released by the US Bureau of Labor Statistics. And it presents basically the number of new jobs created the previous month, not including farm workers. Hence the really imaginative term, non-farm. Now, in theory, for Forex traders, if you get a higher reading, as in a better number of new jobs created, potentially this could be bullish for the US dollar. However, if you get a lower reading, again, in theory, this potentially is seen as bearish for the US dollar. Now, this is why it's important. But Jerry, I've no doubt you probably agree with me that back in the day when we were a bit, the NFP was huge, was massive. Do you agree? We don't really see the impact of it like we used to. What do you think?
You are quite right. I mean, we used to, on the desk, we used to stress the NFP about 5 days before. That Monday of the week of, we're all keyed in and focused on that number. the biggest reason would be during that time, we didn't have the technology we have now. So, as dealers, as people on top of the markets, we had to be able to react quickly because the markets did a lot of gapping during that time. Price discovery was not as good as it is now, especially due to technology. So there were moments in time with delays in feeds, all of these things which would drive traders nuts as well as dealers because the price is so far off. Now, with the price discovery being so immediate and everyone following each other, it's a lot easier to determine where you are, how to get in and out of the markets. It feels a lot smoother now. It used to be, quite frankly, a bad experience most of the time because we're always behind by a few steps from where the big participants are in the marketplace. So now I feel like even a retail investor is right on top of it with a guy on the floor on a desk because the information and the technology is so right at your fingertips. It's a much easier game now, and you can actually use your fundamental, your technicals a lot sharper, more focused because the action is there. The price action is so much different, man. It's so much different.
Yeah, I mean, I couldn't agree more because I remember back in the day when this was now but fields. Now I'm walking with dinosaurs. Back in the day, it was such a huge deal. Everybody had to have a designated role to watch the market, make sure we're on market, make sure this, and it was got very, very intense. But what I've also noticed, and again, like your opinion on this, what I've noticed, the actual market movement it creates now, it used to be huge. I used to see really massive spikes. Now it's a bit more of a case. I don't think the market really pays much attention or excitement to it like it used to. What do you think?
I totally agree. The impact of the actual non-farm now versus back in the day, we call it. It's a big difference because I believe now it's all about information. There's so much more information privy to even the local investor, much less the big guy, that the uncertainty is much less. I think we're all tracking this more. 20 years ago, people did not really understand the impact. Only the well-versed were. Now we're all a little bit more well-versed, so you're not going to have the gaps. Price discovery, as I keep saying, is a thing that is so much easier now than it was before. That taking that uncertainty out, it takes out the gaps. It takes we right now all we're doing is this is the expectation. If it comes outside of it, that's when you see the action, but you can almost map what that's going to be afterwards, as you said. Case in point, if this unemployment rate is higher than 4.3%, right? But we do hit the headline number of what is it, 110?
85,000 is the expectation.
Oh, it's 85. Sorry. Yeah. I'm giving you what I think is going to be. Sorry about that. I'm going ahead of it.
That's okay. Well, I'm going to hold. If it comes in 110, I'm going to think you're even greater than I think of you now. So
I'd probably just jinx the market. It's probably going to come out much lower. We'll see. I have these powers,
Yeah, of course you do. Of course you do. And I think, like, again, you probably see this as well. The market tends to focus really at one story at a time, whatever that story tends to be, and whatever data comes out, it always gets overshadowed by that one story. Now, of course, obviously, this is going to be quite an important thing because there's questions being asked about whether or not there is a slowdown in the US labor market. And obviously, with what's going on with Iran as well, inflation is beginning to bite a little bit. So, of course, questions are going to be asked, are we going to start to see it? And this, of course, would lead us then to the fact that what this announcement might do to the Fed's decision on cutting rates. Because, like I say, beforehand, before obviously the tariffs, before the White House started doing things with Iran, everybody expected more rate cuts. We're now beginning to see the reverse of that, aren't we? with potentially of rate hikes instead. What do you think about that?
Well, first of all, I think that's a little bit, we're a little ahead of ourselves there when it comes to raising rates. I think that's we'll have to see a lot for that. But the fact that we are even slowing down or stopping any thought of a rate cut, that's big for the marketplace. But we need the numbers to continue to come out that shows us the trajectory of not being close to a recession, but being more on the upside, following a small recession, we'll call it, right? Because the numbers have proven for the last year up until the last 2 months that the GDP and those things were, lower, and we should expect more cuts to spur the economy. But now, having 2 good numbers in a row, which I'm a bit skeptical of on my side. I don't have any inside information. I just feel a revision may be coming up that we need to look out for with this number itself. So I would look at the net results of the last 2 revisions and this new number to give us what the real deal is. No revisions or revisions on the upside and a good number here and unemployment rate staying at 4.3 or even lower. That creates a scenario where no one's thinking about cutting rates. Of course, we will be thinking about a scenario of maybe raising rates. I don't think our chief in charge wants a rate hike.
No, he does not.
And we do have a new Fed that's coming. That's a very big factor here. So I think we're more looking at the state of the economy and the trajectory going forward than we are on policy change per se, leading from this number itself. So it's a key number, but it needs to validate the last 2 numbers for us to get excited on that side.
To see the top, because obviously we could look at, for example, the last couple of numbers. January was 160, February was negative 156, March was 185, and April was a surprise at 115. So again, it's quite a steady job market. That's what it's showing us. So yeah, I do certainly agree. It's not panic time, but they're definitely going to rate hikes immediately. However, the question is now being asked. There's other things, like you rightfully said, is also coming out in 2 minutes. We need to get ready. We have average earnings month on month, 0.3%, average earnings year on year, 3.4%, and US unemployment, which I think you made a point before we came on air, may be the main key to pay attention to. Expected to come in at 3.3%. So I think that's, though we might react with the headline rate, that is what might be the slow burner when people digest that, depending on what that number is. Okie dokie, we have, how long do we have? Less than a minute. Let's go through some potential scenarios. Potential scenario number 1, NFP announced higher than expected. USD gains strength as hopes of a future rate cut. Potential scenario number 2, NFP is announced lower than expected. USD falls under pressure and the market rejoices with anticipation that the Fed will cut rates in the future. Potential scenario number 4, NFP comes in as expected. The market is lukewarm to the announcement, because that does happen as well. We don't really pay attention to it. And potential scenario number 4, NFP is announced either way, and the market ignores it as it's more concerned, of course, with the US, Iran, peace deal. And finally, potential scenario number 5, as we mentioned, as you rightfully mentioned, NFP is eclipsed by other job data, like unemployment. So anyway, we're getting close to it now. Are you excited, Jerry?
Oh man, I can't hold it in any longer.
I know. Right, so this is what we're going to look at. Let's look at the euro dollar or cable. What do you reckon would be the mover?
Let's look at the cable.
The cable, I like it. Okay, cable it is. Right, so we've got the cable up. So we're looking at the cable. And let's get the announcement ready. It's about to come out any minute now. Here we go. Whoa! 172. A lot higher than 85. 4.3 unemployment rate.
Steady. That's steady.
That is steady. It means the unemployment is steady, but that is a lot higher than anticipated. So that's 2 months of surprises. And as you can see, straight away, the cables reacted.
The dollar's
under pressure. Dollar strength straight away.
Yes, sir.
Straight away. Let's have a quick look at see the euro, how the euro is doing as well. Euro's the same. Gold, okay, all right. Not as exciting as the currencies, but never mind. Euro, sterling is definitely a dollar, yen. Yeah, nice little spike higher there. So straight away the reaction is
No, you're going to
stronger
get
dollar.
a positive
Stronger
reaction
dollar.
for the dollar. What I would look at now is if there's any revisions. I'm sure there's going to take a few minutes for us to dissolve.
That's a good idea. Let's have a look and see if there is indeed any revisions. The one revision I can see, okay, that the previous number, which was 115, is actually come in or been revised to 179 now. So higher than it was.
Is that the same number we're receiving for this month from May?
No, May's 172.
That's a big number. That's a big number.
179 and so 179 for April. May was 172. So that's been revised higher.
That's a good revision. Now, with the 4.3% unemployment rate staying steady, then that leads to the scenario, hey, we're not seeing a higher unemployment and a higher, so there's not an anomaly here that we can see. It's looking like a good number, and it's a progression of the last numbers. So we're not looking bad here when it comes to that scenario with the jobs, as we thought 2 or 3 months ago. So this is a very big thing for a consistency. 3 months of decent numbers above expectations. That should lead for investors to use that scenario with their trading today. How does that go next week? We will see.
Yeah, of course.
I
like I say,
excited.
Yeah. I mean, this data is obviously very, again, it's like you said, it's sustainable. It's a couple of months of very positive numbers, and the fact that unemployment is steady around 4.3. Like I say, I think the main thing, there was a lot of fear of inflation obviously creeping up with the US Iran situation, but for now, we're not seeing any impact of that.
This may take you to your other scenario, like you said, looking upwards now on what the rates can do on the upward end, because again, the Fed's job is to control this, and create a Goldilocks type scenario, right, where growth growth matches and doesn't exceed a certain amount because they need to stop it. So here we are going into the summer. It's going to be a hot summer.
It is, mate.
It's going to be a hot summer. The next few releases are going to be very key going towards the fourth quarter this year. So exciting stuff for investors. What do you think?
It is, mate. Well, it's a great time. It's a great time to start looking at the markets. And like I say, this is not the most dramatic move I've ever seen on the NFP, but this is a move for a change. I mean, if we quickly look at again, go over the euro, that's a nice move on the euro. Yes. Gold is, again, it's been under pressure anyway, and the dollar yen. But at least we are seeing a little bit of movement, which is nice, because I think it must be you, buddy. You're bringing me luck. Because I've done NFPs before and there's been absolutely nothing. And I built it up and there's been no excitement at all. But yeah, I think you brought me luck.
I will take all the credit, sir. I will take all the credit.
I will give you all the credit, my friend. Okie dokie. Now, guys, ladies, gentlemen who are watching, don't forget, this is indeed a live show. And don't forget, you can indeed ask us questions, anything you like. And I recommend you do, because we've got Jerry here, who is, very knowledgeable indeed. So feel free to ask us questions, or, like I said, as it is a live show, well, I'd like to hear your opinions. What do you think? What's your opinions on where the market? What does this number mean? Where are we going to go? So feel free to jump in and ask us questions, or say anything you like. Being polite, of course, but yeah, ask us anything. So feel free to talk or chat to us. No questions at the moment. We've had some nice comments though, as we were talking. We've had a lovely comment from this individual saying you're amazing people. I think they're talking about you, Jerry, not me. So that's credit
They
to
know
you.
you much better than me, so they're speaking about you. Sure.
And we had a lovely comment here. Again, thank you very much. She said great theories, which I thought was lovely. So thank you for those interactions. But like I say, ladies, gents, please don't be shy. Give it a try. Ask us anything you like. We can share us our opinions. Okie dokie. Okay. No problem. No problem whatsoever. We have no questions today, Jerry, but
It's quite all right. I have a question for you.
Go for it.
If we're here. You ran through the gold 2 times there in your speech, and I didn't hear a sentiment, or you seem down on the gold, like you're tired of watching it. Is that what it is?
I will tell you. I will tell you now. I will never, ever be tired of my beloved yellow metal. As you know, it's my first love, the first time I ever traded. However, over the last couple of months, it has got rather boring. It's gone very sideways. And like I say, whereas we had that great excitement as it was skyrocketing, and it's come down, but now it just seems to be stuck there. So I love it. I always will. But it is a little boring at the moment.
Well,
that's my only problem.
The reason why I bring up the gold is because the last time we were together in Dubai, we happened to be at the expo, which was very big. We had a really good time.
Yeah.
We had one of the commentators there mention some bad words on gold. And,
yes.
We took her to the side. And she said,
I was quite defensive. Yeah.
What's wrong with this? And there's something wrong. And you sat there quietly, and I said, what do you think, James? And he's like, I told her that I think gold is a very much an indicator, and it's with the amount of players in it that you get a very good idea of what's going on in the world by watching.
Yes, absolutely.
And she said, no, this is just a screwed up market. It's fixed. There's something wrong with it, whatever. And you told her, hey, the price of gold should be about 4,500. And this is when the market was at 5,000 and going back and forth. And you said, the natural place right now, I think, is about 4,500. And guess what?
It's 4,500.
You've been totally right. Just from from the area there. And I'm sure she still thinks about you. And she says, I was right. Because she thought the gold was going to go up to 8,000 because no one was going to stop buying it.
I know. She still thinks she's that small, wrinkly old man who talked about gold. I remember that. That was a great conversation. Oh, we had got a question here, which obviously pretty question. What is expected closing price for gold for this week? Now, obviously, that's we can't tell you that because that would be advice. It would continue to advise, so we can't tell you what we think it is. And to be fair, if anybody told you what it's going to be, they'd be wrong because nobody actually knows for certain. Anything can happen. Like I say, we need to see the implications of the NFP, which has just come out, obviously now, and the unemployment, how the market takes it. For now, what we're seeing, the current reaction of the market is a stronger US dollar. But like me and Jay was saying, gold has been range bound for a while, so we can't really give you an expected close for gold by the end of the closing session, unfortunately. But great question. Thank you for asking.
We're going to leave gold alone for right now. That's it's a hot topic, and you don't want to be in the wrong side of gold. That's
no, you don't. Absolutely right.
With war looming still, uncertainties here and there. But I do think with this with this NFP, that should help a little bit when it comes to the uncertainty aspect of it. I would definitely be keyed in on how the bond markets are moving after this number. If there's any insight you have there, I don't have it on my screen right now, but I think we need to look at that as relates to the Fed. So there's a lot of factors, and I can see overall that there's a lot of action in the markets. There are more volume in the markets, as I can see. There's more players in the market. So we're at a very key time when it comes to the public and the investing community coming together and forming what we call this liquidity pool
Mm.
that seems to be growing more vastly.
Mm.
We're not
Mm.
slowing down. Any thoughts of that is out the window. You know, we're in it for the long haul when it comes to what we do.
Yeah.
And,
Well, like I say, the old proverb "sell in May and go away" doesn't exist at the moment for sure, because there is many players in the market and it's getting busier, which is good. Really good for us. Really good for us. Any other questions at all? Anybody else like to ask us anything else? Okie dokie. I think they're bored of us by now. I don't blame them. We've been talking, talking away for quite a while.
listen, James, I told you if we had a few beers,
Yeah, I know.
and a little
Yeah,
atmosphere of being in the pub, we could have got a lot more done.
Exactly. I might even be able to get you to sing. You never know.
Things have happened before, yes. It happened.
Anyway, ladies and gents, thank you so much for watching. Like I say, it has been a big announcement. NFP came in higher, a lot higher than expected. And as Jerry rightly pointed out, the revision of previous month was also higher. It needs to show that we are very steady in the US labor market. So for now, things are looking okay in the United States. Anyway, I'd like to say a big, massive thank you to Jerry as well for joining me. You really made the show really special today.
My pleasure.
Been one of the best watch-alongs I've ever done. I've enjoyed it immensely. Thanks, man. It's down to you.
I look forward to the next one. If I'm
damn right,
again.
man. I'm going to chase you and make sure you come back, 100%. But Jerry, a massive thank you. And would you like to say goodbye to the good people?
Well, thank you for watching this face on your screen for this amount of time. You know, you deserve some credit. And thank you for listening to the voice of Royal. Mr. James, you are very much a key part of what we do.
Thank you, buddy.
We're happy to support you in any way possible, sir.
You're a star, man, and you're a legend, mate. I can't wait to see you again. You take care, mate. Until next time. All right. Yes. Thanks once again, everybody, for joining the show. It has been, it's been a really good show. And a big thank you to Jerry as well for that. Before I sign off, don't forget, these little videos are for educational purposes only. And in no way whatsoever should ever be taken as financial advice. But I always suggest you do your research, your due diligence, and of course, the risks at hand before entering any trade. Anyway, till next time, every single one of you, trade